Is the economic data strong enough for the Reserve Bank to not cut interest rates next Tuesday? If the economy is so ordinary, why are stock prices rising then? And are exchange-traded funds really, really risky? If so, could they cause a GFC? I'm Peter Switzer, and I'm by myself, and I'm mad about money. Well, let's consider the first issue. Is the economy strong enough for the Reserve Bank to say no rate cut next Tuesday? Let me tell you this, the money market actually does something really, really unusual, I think, for normal people. It actually bets what the Reserve Bank might do. And they thought there was a 20% chance of a rate cut in the first Tuesday in October. But since those unemployment numbers came out, whether it's sneaked up, they now think there's an 80% chance of an interest rate cut. So let's have a look at the reasons why. Employment is good, but unemployment did sneak up. Part of the reason was the participation rate went up. So that's usually a good sign. But at the moment, we're saying labour market not as strong as the Reserve Bank would want. Growth is okay. The last number we got was a shocker, but it was 1.4%. It's a shocking number. But the actual quarter was 0.5. 0.5 when you annualise it is around 2%, and UBS reckons we're heading to 2.4% for this calendar year. So growth is okay. The dollar is down. That's really good for the economy. Housing's getting better. Confidence is not good. Both business confidence and consumer confidence is not good. Trump and his trade war is still a worry, and these are sort of the negatives that is clearly affecting the Reserve Bank, and Europe looks weak, not growing well at all. That's why I think the Reserve Bank will take basically an insurance cut in October, but they'll be looking for some real big improvement. I'm ignoring the bell. This is my show. This is my business. It's even my bell is ringing. But the bottom line is, I think the Reserve Bank won't have to do it again for the rest of this year, because I think the data will improve heading into October, November, December, when we're looking at August and September and October figures. Okay, if the economy is so ordinary, how come stocks are rising? Well, let's put it all together. The trade deal is still expected to happen. And if that doesn't happen, Wall Street is betting that there won't be a trade war escalation. That's why stocks keep on rising, and we are playing follow the leader and going up with it. As I said earlier, our economy is not all that bad, and the low dollar is good for stocks that are currency sensitive. You know, imagine a company like Macquarie earns a lot of its money overseas, brings it home in lower Aussie dollars, up goes its profits. So they're part of the reasons why. You've also got interest rates are coming down, and if interest rates are so low, where are people going to put their money? Most people would love term deposits to be 5%. And if they were 5%, I'd be tipping that the stock market would be ready to fall over. But term deposits around 2%, the stock market looks far more appealing, and that's part of the reason why we're rising. Also, our market suffered the election stuff. Bill Shorten's policies were scary. The Royal Commission, all those things are out of the way now, and that's helped the stock market go higher. Population remains really strong in Australia. That's good for growth, and that should be good for the stock market as well. The one thing I will say, this could actually be one of the longest bull markets of all time because interest rates are so low. And it's the first time in my life of commenting on the economy, which I've been doing in newspapers for over 30 years. I've never seen central banks around the world actually in the thick of it, doing stuff before the you-know-what hits the fan. Usually the you-know-what hits the fan, there's a stock market crash, and all of a sudden the Reserve Bank says, oh gee, we were asleep at the wheel, better do something. Well, they're doing stuff now which I think will actually sustain this bull market unless some black swans come along. That's why I always hate walking past Lake Albert in Albert Park, because there are just too many black swans for my liking. And finally, are exchange-traded funds risky? Could they cause another GFC? Really good question. Michael Burry was the guy who was behind the movie, The Big Short. He was also behind the actual shorting of what we call collateral debt obligations, which in a sense triggered the GFC. He raised doubts about these packets of loans which CDOs are based on. And these loans are supposed to be AAA, but he actually started opening them up and said, hang on, there's a whole lot of risky loans in there, ninja loans. People in America were getting loans called ninja loans, no income, no jobs, no assets. Only in America would they get that kind of stuff. Now, he tipped that this would bring the banking system undone, and he was totally right. He's now thinking that exchange-traded funds, because they're so popular, could be a cause for a stock market crash and ultimately another GFC. A lot of people disagree. In my podcast on Monday, Shane Oliver from AMP disagrees. A lot of other people disagree as well. I think exchange-traded funds, if they're based on well-known stock market indices like the ASX 200 or the S&P 500, I think they're okay. I think they will probably overreact and they will go down faster, but they'll also rebound faster as well. And I've got this belief that in those sorts of exchange-traded funds, and by the way, Warren Buffett believes in index funds, particularly the ones that bet on the best 500 companies in the USA, which of course the S&P 500 index is based on, and the best 200 companies in Australia, the ASX 200 index. I think if you're playing in that kind of space, I would not be worried. They might increase volatility. They might increase the exit from a stock market when a crash happens, but I do not think they are fundamentally bad products that could cause a GFC. That's my argument, and a lot of people agree with me, and I'm sticking with it. And before I go, let me tell you, if you'd like to get some stocks to invest in, have a look at Switzer TV Investing, which we recorded on Monday. Some really great ideas of stocks that are really worth investing. And don't forget our property show, which comes out on Thursdays nowadays. I'm Peter Switzer, and I'm mad about money.